All right, so we're back by popular demand. I had recently done a video on this exact same topic, but I had deleted it because I was oversharing a little bit according to my wife. And if you guys are married, you guys know happy wife, happy life. So I decided to make another one that is more to the point. And if this is your first time on this channel, my name is Frankeli Nunez. I'm a South Florida realtor and 12-year bank veteran. And I like to go about financial topics in an uncommon and very personal way. I love to explore all these ideas so that hopefully you can get ahead financially. And if you haven't done so already, make sure you like the video. This helps get in front of more people. And also subscribe to the channel so you can be notified with more videos just like this. Now let's dive in. So we were deciding whether or not to rent rather than buy. I've had experience flipping homes, buying investment properties, in-state, out-of-state, all of that. And we were looking at, would it make sense to rent or buy a home that we like? And what do we like? We like a townhouse, 3-bed, 2-bath, something with a backyard for the kids and a garage for me. So this is the ideal property for us. And once we looked at it, we were analyzing, okay, would it make sense to purchase or rather to rent? So let's dive into when it makes sense to purchase and when it makes sense to rent. And then I'll share with you why we chose this strategy to rent rather than to buy. So when we're buying a home, we're looking to live out the American dream. We're looking at buying a place that we can afford every single month. So we were looking to put 20% down, and we were looking to make sure that is a comfortable payment for us. And with this townhouse, it checked off all those boxes. It was gonna be affordable, but it was also a little high on the pricing, which caused us to kind of really dive deeper on whether or not we should rent or buy. And when you're buying a home, you're usually buying a home because it's gonna have that growth, that equity appreciation. It's something that you can leave for your kids. It's something that can allow you to build a legacy. It can also serve as potential future rental properties and increase even more. So when we were looking at this, we were looking at it with that kind of heart. Now, let's dive into when it makes sense to rent. It makes sense to rent when you want something that is a little bit more flexible, when you really value not having to come out of pocket for any emergency expense when it comes to the real estate. And this is the bonus benefit with renting, and this is the reason why we chose to go with the renting route. And that is that we had an alternative investment where those funds were the difference between the mortgage that we were going to have, which was on the higher end, and this rental amount was a huge spread, hundreds and hundreds of dollars. So by having that spread, we took that and allocated it in an account that will grow in value over time. And that would be in a similar or greater position than funding a real estate transaction. So we looked at it from that lens, and from having my experience in banking, my investments have been growing pretty okay. And that caused us to have the confidence to put those funds aside and have them grow over time. We are grateful for having that option available to us because it really made this decision very easy. Now, what happened after 2 years? Our goal was to be in this place for maybe 1 or 2 years. And this is what happened in 2 years. In 2 years, the South Florida market got soft. There have been more inventory and less demand, less buyers because of interest rates being so high and prices to come down quite a bit. So this home actually has gone down $30,000 in value. And also to sell, if we decided to move, it would cost us realtor fees, title fees, among other fees to get out of it. So we actually would be in a deficit, in a hole to just get rid of this place at this point. Now, if we hold on to it, then great, that's fine. Long term, we probably will be able to recoup and it will grow in value. But in the short term, we're stuck. On the rental side, I can move whenever. We are now on a month-to-month lease. We can rent, we can move whenever we want. And we're still enjoying the same space. And that difference has gone up in value, actually significantly up in value, and more than what we have lost in this property. It has benefited us way more to have those funds allocated in an alternative investment account than in real estate for our circumstance. You may be asking yourself, okay, well, where does this apply? I've received comments on the past video like, oh, where I live, no, it's pretty much the same. And that might be the case, but in South Florida, there's quite a bit of a difference. And if you're strategic, you can actually take advantage of this opportunity and place you and your family in a better position. So if you want to know where this would make sense and you want to look at rentals in the South Florida market, I'll be happy to share them with you. I'll share with you the link in the description below. You can contact me there, schedule 15 minutes, and I can get a better idea of what you're looking for. Also, if you don't have an account to build wealth and you like to explore those options, I'd love to share with you all the options that are available so that you can have an alternative way to better position your finances. Now, another issue that comes up when renting or buying is your credit score. And in this video, I'm gonna share with you what my wife did to have a 800 credit score, and she only had one account to her name. If you want, you can click on the link right here, and I'll see you on the other side.